Hi, this is Ian Coleman. This is this week's video analysis for the dollar index and the FX majors going into the week 1st of October 2018. We're going to start off with the dollar index as always. We've obviously seen a move to the upside after the FOMC increased rates on the 27th of September by another 25 basis points. This is the third time that we've seen rate hikes in 2018. Is it going to last? Well, we don't believe so. We believe that there's going to be some more corrective move to the downside for the dollar index, and we're going to explain why. So first of all, we've got the weekly chart. Here we can see that we actually had a reversal formation up around about 97, the figure, and this is a evening doji star formation, a free wave pattern, and that normally highlights the top of a trend. Now, the reason why we think that there's going to be limited buying in the dollar index, if we go to this daily chart, we can see that the last move to the upside was impulsive. We had 5 waves. We've then had this choppy corrective 3 wave move to around about 94, the figure, and like I said, then we've had this the Fed rate hike, and we've moved to the upside. But we do look to be forming a bearish head and shoulders pattern. So as long as we don't really get a breach of this 61.8% pullback level around about 95.77, then this formation looks like it's going to stay alive. So this being a left shoulder or a barrier around about 95.50, the head up here around about 97, the figure, and then again a right shoulder around about 95.50, 95.77. Bit too early to call it, as we do need to see a break of 93.84 for a move further to the downside. But this is really where we're looking for dollar buying to be limited this week. If we go back to this weekly chart, and if we use that level that we mentioned, 95.77, if we use that as a top side for this AB, what we believe will be an ABCD formation, corrective formation. So this was that impulse move that we talked about in the daily chart, then coming lower in wave A to B, moving higher now in wave B to C, and then coming lower in C to D. And 92.58 is a 50% pullback level of that impulsive rally. So if we just move that up a little bit, the scope maybe for a slightly higher correction going into this week around about 95.62. So yes, we are bullish in the dollar at the moment. Intraday calls, probably especially for Monday, are going to have to be to buy dollar dips, but we're wary of a larger move to the downside, and this reflects quite well when we're looking at other dollar majors, this limited dollar buying at the beginning of next week, and we're going to explain why. So to start with, the euro dollar. I think this is quite a relevant chart to show to start with. We've got an impulse, reverse of what we saw in the dollar index. So we've got an impulse move to the downside, 5 waves completing around about 113.01. Then a choppy move to the upside, levels close to 38.2% pullback at 117.80. Did find sellers. Aggressive follow-through selling last week has posted a bearish outside week. Now normally we like to see these formations at the top of a trend, and they do sometimes highlight the top of a trend, but shorter time frames give it a little bit of a different story. So just going back to that weekly chart again, normally moves to the upside, especially if we're looking at time scale. I mean, we've had a move from the 12th of February all the way to the 12th of August. It's unlikely that the corrective move is completed in just 6 weeks. It's more likely to be about 12 weeks. So what we're looking for here is possibly an AB, then a BC formation, then a CD formation, again to the upside. We've got bespoke resistance at 118.70, close to the 50% pullback level. So again, a move lower before the move higher. But again, if we look to shorter time frames, and this is actually the 4-hour chart from last week's price action, we stalled at 261.8% extension level at 115.81. D-markers post a 13 count. I believe it's on the 1-hour chart. That normally highlights the end of an immediate trend, so there's scope for a move to the upside. I've highlighted this area here because we've got our bespoke resistance at 117 the figure, and we've got a 50% pullback at 116.92. And again, if we then try and forward think this this move, impulse move to the upside, corrective two-wave pattern lower. I'm taking the BC leg from around about 117 the figure, and it brings us all the way down to this channel base, which could be a reverse head and shoulders pattern. So left shoulder, head, right shoulder. So the immediate bias, I think, going into Monday is going to be a corrective rally. We've got a Marabuzo level from Thursday. We've got an area that's been quite pivotal, 117 the figure. We've got our bespoke resistance at 116.95. That's really the area that we're going to be looking at selling into to take us down in this last corrective leg before we move again to the upside. So immediate bias bullish, but only to around 17 the figure, and then looking for lower levels next week. Sterling dollar. We've got what we call a Fibonacci confluence area in sterling dollar that we're going to focus on this week. The weekly chart, again, an impulse move to the downside, corrective choppy formation higher, an inverted hammer or doji style candle close to the 38.2% pullback level at 133.17. Rallies again last week getting sold into. This is the time frame that we like for this week, and this is the 8-hour chart. We've got a Fibonacci confluence area here around about 129.05, so that's a 61.8% pullback level of the last rally, and it's also a 161.8% extension level of the last sell-off. So this is going to be a prime area. If we do break there, there's scope to get all the way down to the previous low, by the way, at 126.60. But I believe with that limited upside projection in the dollar index, that 129.05, 129.10 is going to be prime. Monday, we've got resistance at 131. Going to be looking at selling into rallies first thing in the week. Now, dollar index, like we said, immediate dollar bias is to the upside. Daily chart highlights a morning doji star formation, and then we've had this aggressive move higher. We only sort of had a temporary pause near to the 161.8% extension level at 98 the figure, a mild correction lower, and then we're starting again to move to the upside. Now we have got a head and shoulders breakout target first, so this is the left shoulder, head, right shoulder, taking the projection breakout level. This is going to be the immediate upside target for next week, which is 98.54. Breaks there, and we're looking for a move back up towards parity. 261.8% is located at 99.60. To the downside, 97.60, 97.50 is quite decent support going into early next week. Dollar yen I'm a bit wary of, just because we've got a couple of levels, and I'm wondering whether or not they're going to hold. Plus, we're quite bearish in other yen crosses. So we've got a 61.8% extension level here. We have poked through there, but again, I'm slightly wary about this sort of choppy price action to the upside. And if we go to a 4-hour chart, again, it's not normally a chart that we'd really concentrate on, but we've got a 261.8% extension level at 113.70. We've also got a DMARC 13 count on the intraday chart, so there's ample scope for at least a correction to the downside first thing next week. And we definitely wouldn't be looking at buying at current levels. If anything, you know, if you are a dip buyer, I think 112.60 is going to be quite relevant early on next week. Dollar CAD, it's bucked the dollar trend. there's nothing really to highlight that the sell-off is coming to an end. We have got an intraday 261.8% extension level at 129.10. That's on the 2-hour chart, but I think that any sort of significant dollar rallies are going to be sold into again. And if we go to the weekly chart, we can see that we've got a wedge breakout. Target area for here, for this formation is around about 122.90. We've got some bespoke support at 124.37. Again, there's nothing really to highlight that this seller's not going to is going to reverse. Beginning of the week, 113.16 is a significant upside barrier if we do see any corrective rallies. Aussie dollar, we're getting close to the end of our analysis now. Aussie dollar looks like a corrective channel, possible head and shoulders, so left shoulder, this is the neckline, head, and then right shoulder down here. We've also got a Fibonacci confluence area, so we've got a 78.6% pullback level, 71.40. We've got a 61.8% extension level at 71.32. To the upside, 72.50 is an upside barrier this week. So again, corrective move lower could then possibly form a bullish Gartley pattern and project Aussie dollar up to higher levels. Euro sterling, this trend of higher lows continues to cap the sell-off. However, I do believe that we are forming a bearish head and shoulders pattern, so left shoulder, head, right shoulder. Got to get a breakdown here next week, which is around about 88.36 to confirm that pattern. To the upside, 89.40. That's actually the wrong place. 89.40 is our upside barrier going into this week. Euro yen, two quite decent Fibonacci levels holding here. If we go to the weekly chart, we can see that a 61.8% pullback level at 132.58 has attracted some selling. There's also an outside day posted on, an outside week posted on the weekly chart, and we've had some downward pressure. If we go to this time frame, which is the 4-hour chart, again we had a bit of a Fibonacci confluence area up around 133, the figure. We've completed. We're now in a choppy move to the downside. Again, there's nothing really to say that the move lower is likely to end. Using a bit of correlation, obviously euro dollar has scope for a bounce earlier on Monday. Upside barrier in euro yen is 132.13. Downside support is located at 130, the figure, which is also close to a previous area of support, so it's likely to bounce around that level as well going into the latter part of next week. Okay, I hope that all makes sense, and it's given you some ideas of at least what we're looking at. Good luck, and we'll speak to you again next week. Thank you.